Hi, my name is Jim Bullard. I'm the Dean of the Mitch School of Business at Purdue University. Yeah, the U.S. economy is proving pretty resilient in the face of a lot of tariff uncertainty during the first half of the year here, but labor markets look pretty solid. Inflation, even though there's been a lot of consternation about it, inflation has basically come down slowly in the first half of the year, so that's been positive from the market's point of view. And initially, equity markets were very worried, let's say in the April timeframe, about the new policies of the new administration, but I think they've come around now, and so now you're seeing actually record highs as of today on valuations in those markets. So I would say overall the U.S. economy is in great shape. Monetary policy looks like it's poised to move interest rates a little bit lower in the second half of the year, partly because inflation coming from tariffs hasn't materialized so far, and partly because the policy rate is a little bit higher than it needs to be, probably for the amount of inflation that we have in the economy. Yeah, unemployment in the U.S. actually declined a little bit in some of the more recent labor market reports. So the current level, 4.1%, is very low by U.S. post-war standards, and really reflects a very robust labor market. Many people would say that that would be the natural rate of unemployment in the U.S. That would be the rate that you would normally expect from a certain amount of churn in labor markets. Some businesses not doing well, going out of business. Those people have to go look for new jobs and so on. Or people just, units within companies maybe not doing that well, and they get shut down, and those workers have to find another job. So there's a certain amount of churn, and that determines a natural rate of unemployment, but most people would say this is surely very close to the natural rate of unemployment, or even below, you might say. I think a little more prudently would be to say that this is probably below the natural rate of unemployment. So in that sense, I think we have a very robust labor market, and I think we're fully past the whole pandemic era. The pandemic era caused tremendous disruption in labor markets, but I think most of that is behind us now. Yeah, I think recession probabilities have receded now, and they're probably only a little bit higher today than they would be in any ordinary times in the post-war era. So I think there's not particularly high recession risk at the moment. The main concern during the first half of the year has been the global trade war, and that the global trade war might spiral sort of out of control somehow, and then that might cause a global recession. That so far has not occurred, and it looks like cooler heads are going to prevail, and we'll get some settling, I would say, in the global trade arrangements, and then once those arrangements are set, then everyone will know what the rules of the game are, and they can go ahead with their investments and businesses across borders all across the world. So I wouldn't say we're quite there, but sitting down today, we have a trade deal between the U.S. and Japan. Earlier deals have been announced between the U.S. and Indonesia. You've still got some big ones hanging out there, which is the U.S. and the European Union, and the U.S. and China. And really, I would say if you got to any kind of reasonable compromises with those big entities, you'd be a long ways toward stability in global trade arrangements, and I think that would be very positive for markets. Markets are already anticipating that that's what's going to happen, and that's part of what has driven equities higher over the last couple of months.